Welcome to the Private Lenders Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, thanks for checking out the show. Jason and Chris here as always. We do appreciate it. Real quick, if you haven't done so already, go over and check out hardmoneymastermind.com. Join us and the 2,600 other lenders in there. Join the conversation. Check out the trainings, the live monthly training, everything else. We'll see you inside there. Okay, today we're talking about quickly moving through loan quotes, because a fact of this business is that it's a high lead volume sort of game, right? If you're doing a decent job at marketing, you're going to get a lot of calls. If you have private money to put out there, people are going to reach out. It's just part of it. There's a lot of leads that come through. And the game is to get very good at understanding the situation that's going on and putting out some preliminary quotes so that it's not going to take you all day, right? Because handling incoming leads could literally take all day long. And there are other things to be done too. So we're going to dive into how to do that quickly and effectively.
So I think a lot of lenders struggle with this because they don't know upfront how much they're willing to lend the borrower. And in order for them to come up with that exact formula or the exact amount, they have to do proper due diligence. And no doubt, before you term sheet and commit to a borrower, proper due diligence up front is something you can do, but not on the front end, right? Because the last thing you want to do is, take a full loan application, call it, pull comps, go to the property, get all this stuff together, and then the borrower doesn't even have a dollar in their bank account and just doesn't qualify for it. Or you go through this 30-minute conversation, they ask you what your terms are, you tell them your terms are like, oh, I'll just get a Kiavi and I'll get something cheaper, right? And then you in essence, different script and different conversation to reframe that to get them back into your wanting to use you, but whatever, that they don't qualify or they don't want to use you, right? So you got to be able to do this quick and kind of on the fly. And you can do this as a one-part conversation or a two-part conversation, depending on your comfort level and experience level. But you do got to be able to kind of go through some of this stuff first, just to filter it, to make sure it's something that potentially works. I think we can all agree that if you can probably get like 10 pieces of information from the borrower, and we'll go through, what we think those are, that you can determine if it's something that you're willing to do or not, right? Like, let's go through these. So the property address, what they're buying the property for, the construction costs, their experience level, their credit, how much cash that they want to put into this deal, how much total cash or liquidity or assets they have in general. Do they have other properties for cross collateral? When's the closing date? Right? Like, through our scripting process, we go through all of these things in a manner that, we're not like, oh, hey, this is my checklist, I need to ask you all these questions, or here's my loan application, you don't have to fill this out. We're having a conversation with the borrower that is only taking anywhere between 1 minute and 5 minutes to determine if this is a deal we want to do, and this is a loan that the borrower, in essence, wants to take from us. And, if you think about old school kind of sales scripting, related to building rapport and then needs analysis, and then in essence kind of going through a conversation through storytelling, like, it goes a long way to determine to go through the sales process with that. So let's just kind of, you want me to do a quick script, Chris, of like how that will play out?
Should we role play?
Yeah, I mean, we can role play. That's fine.
We know this well enough.
Let's role play live on the fly.
All right, you be Jason, I'll be the potential borrower.
Yeah. So, thanks for calling Hard Money Bankers. This is Jason. Can I help you?
Jason, hi. This is Chris. I was referred to you by someone at the meetup group. They said they've worked with you before, and I'm actually looking to finance a flip I'm doing in Montgomery County.
Oh, that's great. No, I certainly appreciate that. Yeah, let's just go through a few quick things. And let's see if we can make something work. So you said you're buying it as a flip. Where in Montgomery County is it located? What's the address?
It's 123 Main Street in Germantown.
Got it. Yeah, I'm actually pretty familiar with that area. grew up in the next town over in Rockville, my business partner and I. So I'm actually familiar with it. And actually, now that I see it, I think we might have actually done a property in that neighborhood before. So that's awesome. And what's the purchase price?
I'm about to offer 450. It definitely needs some work. I think they're going to take it too. Like they verbally agreed.
What about your renovation budget?
I'm going to put 150K into it.
150K. Okay, nice. So that'll be a good, high-end renovation, for those. Those are the single families over there, right? Yeah, it's
That's
a single
right.
family house.
Yep.
What do you think you'll be able to resell that for?
Definitely in the eights. I don't know. I'll talk to the agent. I don't know if it's going to be low eights or high eights, but the renovated sales seem to be going around there.
Yeah, that's there's definitely some good profit margins. Have you done have you done any projects like this in the past?
I have a few rentals that I hold also in Montgomery County, and then I did one flip last year in PG.
Nice. Okay, good. No, that's definitely good to know. Let me kind of just tell you how we structure these loans, and we can kind of go from there. So typically what we'll do is we'll end up to 80% of the purchase price and 100% of the construction costs. So the way that those numbers would break down is it would be $360,000 towards the purchase and $150,000 towards the construction. Right. So 360 plus 150. So in essence, we would get, give or take, we'd probably do maybe a 5-10 loan amount. So what we do is we try to be 80% of purchase and 100% of construction, up to 65% of the after repair value. So in that case, the loan would be about $510,000. So we're good there. And, just to rehash, it would be 360 towards purchase and 150 towards construction.
I think I followed the numbers, but how much would that mean I would be bringing to the closing table?
So you probably need, I don't know, call it about 120 grand or so, maybe a little bit more, 150 grand. If we could do this at, let's say 150,000 down payment, is that something you can make work?
I mean, I have that kind of liquidity, but I wanted to save some for, monthly payments, construction, overage, stuff like that. Is there any way that we could make this happen that I bring 100K to the table?
It's possible. It might be a little bit tight. I can definitely, take a look. If it was a little bit more though, is that something you can make work?
I mean, probably.
Okay.
Probably.
All right. Yeah. I mean, I'll dig in and I'll see. Again, I don't want to commit over the phone. If you were like, hey, I only have 40 grand, unfortunately we wouldn't be able to do that. But I did want to see kind of how much you did have that you could put into this, just to make sure, it's something that we can work with.
A couple other quick questions. So do you guys do pre-approval letters? Because I will need to submit that contract tonight with one.
Yeah, okay. Absolutely. Yeah. Well, I want to take a look at this property first. When we get off the phone, I'm going to pull some comps on it, do a little due diligence on it. And, if it ends up being a good fit and we can make it work, I'm certainly happy to give you a pre-approval letter.
Okay, cool. And what are we looking at in terms of rate and points?
All the loans we do are the same. It's a 12.99% interest rate, and it's 3 points, and it's a 1-year loan.
Okay, I understand. First things first, hopefully I do get this under contract. So if we could move forward with the pre-approval letter, I think that would be great for now. Then we can rediscuss the numbers. Let's
do this. Let me take a look real quick let me take a quick look on some comps on MLS real quick. I do know the area, so I'll familiarize myself with that subdivision, and let me get back to you here momentarily, just to make sure we can what your down payment's going to be. I honestly, it's probably going to be closer to 150, and I know you want to be at 100, but let me just see where we're at real quick, and then we can finalize that. And if you can make if that works, and you can make that number work, I can go ahead and send your pre-approval letter, and we'll go from there.
Okay, sounds good.
But by the way, what was your email address again? Just so I have that for my file.
It is chrishaddon@gmail.com.
Excellent. I appreciate it, Chris. We'll talk soon. All right, so end call. Few takeaways. And when we started this episode, I don't think we were planning to role play, but I think this helped. Those numbers were
one
off
way
the
to
top of our.
describe what we're trying to accomplish is just to do it.
So here's the thing. I haven't spent any time on that deal yet, right? Like I had a 3-minute call. That's how calls go. Maybe there's some a little bit more rapport. Maybe there's a little bit this, but like, I'm going to tell you what I accomplished as an originator / underwriter on that call. Okay. So, I know where the lead came from, right? It was, for the most part, I tried to build rapport a little bit on the front end. I told them that, oh, hey, I grew up in that area and we've actually done some loans in that neighborhood. And then I look like I'm the expert in that area. It's like, oh, Jason's the expert in Germantown, Maryland, because they've done loans for her. He's a localized lender, right? So I wanted to get that into their head. I know that, they probably have good credit because they have bank loans on their rental properties and they've done a deal before, right? So I didn't ask him what his experience is. I'm not asking them certain direct questions. I'm getting them through conversation pieces. So what I got out of him is how much cash he wants to put into this deal. And for the most part, how much cash he could put into this deal. And that's what's important. And, I kind of anchored with like, hey, you're probably going to need about $150,000 or so. Is that something you can work with? He came back at $100,000 that he wants to work with. Okay. I don't know if we're going to be able to make this work at $100,000. Typically at a 5-10 loan amount, our borrowers would typically need more than $100,000 on those deals. But I also know that it's a good area and stuff like that. But now I know what we're working with, right? So let's do what other takeaways, Chris, and then we'll go through next steps of what I would do afterwards. Was there any other takeaways that we got from that?
No, I think that's it for the most part. Like one thing to emphasize that you said before is that you haven't done any due diligence yet. You're trying to arrive at a loan quote that could work for both the lender and the borrower through conversation using their numbers. Mm-hmm. And then you can go back and check it later on, get an inspection, do all the normal due diligence stuff. But just having that conversation up front, I remember one story from early HMB days. This just occurred to me before. I haven't thought about this in a long time. But somebody who used to refer us business in the early days, I remember they were like, oh yeah, here's the property they're looking to buy. Should we go take a look at it? Just like right up front. It was a person referring us a deal. Do you remember this? Was way early on. And
I mean, it could be numerous occasions.
Yeah. And they were like, all right, well, here's the deal. Like, should we go out there and, see the condition of it, see what we're comfortable lending? And Jason was like, no, just let me talk to the borrower and talk through the numbers. And if we have a deal and they want to pay a valuation fee, then I'll take, a third of the day and go out to this property across town. But I'm sure there's lenders listening right now that probably jump the gun on due diligence stuff without knowing if this borrower is going to qualify to do a deal.
Yeah, and going out to the property at some point is fine and important.
Of course.
I'm not saying don't go out to the property, but you got to get through this stage first to see, to see what's up. Make sure the numbers work based off their numbers and verbally before anything. And listen, I might come back and I might go pull comps and they might need $200,000, but that's okay. At least I know what they have. If the borrower said they had $40,000 to their name, the conversation would have gone very different. It would have been like, unfortunately, that's just not going to be enough cash to make this deal work. Is there any other cash you can come up with somewhere?
Or cross collateral.
Yeah, or cross collateral or cash partner or something, right? We would go down that road depending on where the conversation went. There's lots of different directions that we would go. So in this particular case, what will happen is I'll go to MLS, I'll pull comps, I'll do whatever I can electronically to determine what I think it is. If you're newer and you're not an expert at MLS yet, learn it and continue to kind of hawk it until you're comfortable. You can also call real estate agents, other real estate investors, maybe appraisers. Call them on the phone and be like, and I do this sometimes in some areas as well. I did this today. I hit up a buddy of mine. He asked me my opinion on a deal, and I was looking at a deal that was a little bit complicated. I hit him up. I was like, hey, out of curiosity, what do you think the numbers on this deal were? And just to get his opinion. And you start there. So regardless. So then I'd call him back and I'd be like, hey, Chris, hey, I took a look at the property. We're comfortable lending, 120 on this deal. I know you said you had to get it under contract. The good news is, since we are a private local lender, we can close super quick and I can get this done for you. I know you only wanted to put up 100 on this. I can do it at 120. If you can make the 120 work, let me know and I'll get you that pre-approval letter and we'll do it. And, I'm not just going to spit out a pre-approval letter to anybody if they don't qualify, right? There's no need to. I'm not going to do any work if they don't qualify, besides some basic due diligence on the property, right? Now, again, someone might ask, well, how do you know that the construction numbers are right? Well, I don't fully know that the construction numbers are right, but I'm going to base it off of their numbers first. And if I go in and the construction numbers are completely off, 150 is very reasonable for this hypothetical deal that we were talking about. If the guy said that it needs $25,000 in construction and the property's in Baltimore and it's a shell on a property that was built in 1920, that's not reasonable. And I'll bring that up on the front end. And again, if we're off by like 10 grand, 15 grand on a rehab budget here and there, it's not the end of the world. We're making these borrowers bring a lot of money to the table. They're good. They're qualified. They're in good areas. We're comfortable with it. And they have means to make up for it. If the borrower's got crappy credit, they're not bringing any money to the table, it's not a great deal in general, you can't make that deal work. You have to nitpick the whole darn thing. In these deals, there's a lot more flexibility because of the quality of the deal in general. So I would get him the pre-approval letter. I'd, in essence, like hawk him for the next 36 hours or 48 hours until to make sure he got it under contract. And as soon as he has it under contract, I'd be like, send me over the purchase contract. As soon as you send me over the purchase contract, I'll get you a full term sheet outlining the terms we just discussed. And then I'll send him the term sheet. So very little work, manual work, and very quickly to analyze the deal and quote the deal.
Yeah, it's a volume game like we started with. Like, you want a lot of these calls. You want local investors who know what they're doing. Some people are qualified, some aren't, some are in between. But you're going to be fielding all of them. Web applications, text, calls, whatever. However it comes in, we'll take the lead. And the name of the game, like we started with, is let's get through these quickly, efficiently. And look, like sometimes a borrower wants to tell you their life story, tell you every detail of the project, like just because they don't 100% know how to guide through the conversation. They just kind of want to tell a story because they're not used to this. Like, you're the professional, you're the lending professional who does this for a living, and having proper scripting and a structure to how you move through this is the job, right? So you want to do what's right for the borrower, which is see if you can do the deal and talk about the numbers, build some rapport, all the stuff that we went through. And also at the same time, do what you need to do as a busy lender, business person, right? And accomplishing both of those is the goal. And that's, how you provide the service that we're all supposed to provide in a professional way and get deals done for good clients.
Yeah, let me add one more thing to this. The majority of the time when the phone rings, the first question the borrower is going to ask is, what are your terms? What's your interest rate? What are your points? Because that's the only question that they know to ask, right? Like that, they don't know what else to ask. And it's like, no problem. We actually have a few different options. Let me ask you a few quick questions about this project to make sure it's a good fit. Like, right, you divert it and it's fine. And it's like, what's the, because I don't need to give them what my terms are if the property isn't even in a city or state or area that I lend in, or if they don't have the cash. So, it's funny. We were training one of our partners in another market because we're trying to help him with, conversions on some of these. Like this, we haven't even talked about like this being an actual sales call without the borrower knowing that it's a sales call and converting them into a closed deal, like, and rebutting, well, why are you guys, 12.99% and Kiavi's 9.9%, whatever. Like, that's different episode, different conversation. But we had I did calls with him live when he was in our office, and he was like, dude, 50% of the calls you had, they called you to ask you what the terms were, and you got off the phone with them, and you had to tell, and they didn't even ask what the terms were. Like, they didn't even care at that point. And yes, they do care what the terms are, but like, before I got off the phone with them, I was like, oh yeah, by the way, let me just tell you what our terms are real quick. Because I didn't want to, go down this whole path without them knowing the terms, right? Point being is they forgot, because that's not the most important part. The most important part is on your end is determine if it's a deal that we can do. And then, to make sure it's a deal that kind of works. And, one big thing we always talk about is, when do you have to close? Do you have it under contract? Things that we can use to build frame control and use that as a selling point of like, yo, you told me you need to close next Friday. Like, we got to move quick. Or do you have it under contract? Okay, well, there's no sense of urgency if you don't have it under contract, right? So these are all things that we do kind of to just get through lots and lots of leads. And we've learned this just by, real life experience, by doing whatever we can to get our phones to blow up day in, day out, and have lots of deals to look at. And I think that's an important thing that a lot of private lenders are missing.
All right, everyone, that is the pod for today. Hopefully you learned some stuff that will hopefully increase your conversion percentage. That's the mission. All right. That's it for today, guys. We'll see you next time here on the Private Lenders Podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.